Hello and welcome to the CNBC Africa special MPC broadcast. I'm Demisha Greater, and with me, my guest today, Mabyanine. He's a Mabyanine Phiri. He's a portfolio associate at ACM Gold. Chris Hart, Chief Strategist at Investment Solutions, and Clive Ramathibela Smith, Investment Specialist at Phiri Inc. But before, gentlemen, thank you so much for making the time to join us. Before we get to your predictions, I would like to cross over to our newsroom, where we have a little of our own consensus that is going on. Rafiu, I know you're standing by, so tell us, what's the newsroom saying in terms of what we can expect from the government?
In terms of what's going to come out of the meeting this afternoon. But let's move down the production line here in the newsroom to see what the people here think. So, Nicole, what is your impression of what's going to come out of today's meeting?
I think government is going to leave the rate unchanged. I don't see them hiking it or dropping it.
Unchanged. Lesego, what do you think?
I think it's going to remain unchanged. Yeah.
So two unchanged to me. Michael?
You know, the general consensus seems to be unchanged, but if I was on the MPC voting committee, I would vote for a cut, 50 basis point cut. If we look at our BRICS peers, we've had Brazil, they hiked the rates, but they've got their own set of challenges to deal with. But you look at China, India, Russia, they all cut, and that's to increase.
Well, there's a radical kind of view coming from Michael there. Bhavani, do you share Michael's sentiments, or are you with the other half of the newsroom who are thinking that it's going to be unchanged?
I don't think we're brave enough to cut, so I think unchanged.
Okay. And you, Cindy?
Look, Michael is ambitious, but I think it's going to be unchanged.
Okay.
As well.
Well, Dumi, I must just put in my opinion here before I cross back to you. I think that we need some radical changes here. I think it would be a necessary evil for us to experience a bit of a hike, a little pinch for consumers, and then down the line we could start to ease off. So I guess we'll see and wait what comes out of the MPC. Back to you, Dumi.
Rafiu, I think markets will start off by looking at the dollar rand, looking how it's trading so far ahead of that all-important decision. We're sitting at 11 rand 86 to the good. We have seen a little bit of weakness that has come through the local units over the past 48 hours or so. Let's move on to the JSE all share, looking at the different sectors there. Everything in the red at the moment. Industrials down 1.6%, financials down 1.7%, banks also under heavy pressure there, and resources seems to be the outperformers, because they're sitting flat while the rest are down by more than 1%. The JSE all share 1.3% in the red there. We're still sitting at 51,642 points. Just going back to my guest, Mabyanine, let me start with you. We've heard the consensus from the newsroom, but let me find out, what do you think is going to happen today?
Well, look, I think it's not mystery at all, and I would think that's going to be the outcome.
Clive, let me go with you. You've heard some interesting views. Michael Bratt always likes to push the boundaries there. So are you going to be in consensus with Mabyanine, or are we talking about Michael here?
We know what we will see. We know that it probably will be the fact that we'll see a no change at all. But we know what is significant for the economy. And I know some people would disagree with this, but I do agree with Michael to some extent that the fact that a cut might just be something that will stabilize and maybe give the consumer a bit of breathing space. I mean, we've just had petrol price hikes, we've just had tax increases, so the consumer is under tremendous amount of pressure, and I think that some relief, some relief in terms of the rate would help. Absolutely.
Okay. Chris?
Yeah, I also think that will be unchanged, but I have a different view from Clive in the sense that we don't need consumption boosted, we need investment boosted in this country, and to boost investment, you need savings. This country needs quite a bit higher rates to actually get the savings and investment side back in kilter. At the moment, policy favors the borrower over the saver. Part of our low growth problem is that last year, some of last year's growth was taken from this year because we borrowed for consumption reasons. And that's the problem with low interest rates. And low interest rates also negatively affects capital allocation efficiency in an economy.
Mabyanine, let me come to you. I'd like to touch on a comment from the IMF about a week and because we are sitting with two big factors at the moment. That is the strengthening of the US dollar and when we are going to be seeing those interest rates being hiked by the Fed. Based on that, how much of the action that we're most likely going to see today will be impacted by external events and domestic events? So what's the balance going to be?
Yeah, so I mean, it's been very straightforward from the last meeting that any slight increase in the oil price is going to sort of erode the whole benefit that we had in terms of the inflation outlook. So to answer that question, I think there's going to be quite a lot of external factors contributing to what's going to come out today. Apart from oil prices, we also have just a general outlook in terms of global growth. So ESCOM is one challenge that we have, and they've also recently announced that there might be a rate hike in terms of the tariffs. So yeah, but I think the majority is external factors, but the US also improving quite well, and that's definitely going to affect the rand-dollar exchange rate, and we've seen it. It's actually already happened.
Clive, what's the balance going to be if we look at the statement I just made from Christine Lagarde in terms of external versus domestic needs?
Yeah, before they start dictating to us what we have to do, I think we must get our own internal affairs, or what they call house check-in for ourselves. It's very important. And it's difficult, and I reckon really critical to the pulse of the South African economy. And on top of that, you've got the global spectrum not looking really great. So the question is, what do you do if you're in the shoes of Governor Kganyago? One of the first things that comes to mind is, do you want growth? And if you want growth, I agree with Chris. There's certain things. Every time you go for growth in any ways, there has to be some sort of casualties. Somebody's going to get hurt. We know that. But do you go for a cut in favor of the consumer so that business can therefore produce more and then the consumer can consume? Or do you go for an increase that you get the guys to actually start saving so that you have a bit of growth because you know that you've got some savings to look forward to?
Let me cut in there because the governor's about to take to the stand in the next minute or so. Chris, just in terms of your balance, I want to hear a weighting here. 60, 40?
Firstly, we've got a very independent central bank. They don't take